Welcome back to Mortgage Chicks with Hot Tips. I'm Diana Harvey.
I'm Elizabeth Hull.
I'm Kim Harestad.
I'm Cindy Walker.
And I'm Stacey Van Schenck.
So before we get started, we just wanted to remind everyone to like, subscribe, and share these episodes. Today, we are going to be talking about renting versus owning. Should you or shouldn't you? That's the question. So Stacey, why don't you talk to us a little bit about the cost of buying a house versus renting?
So the difference between the cost of buying a house, yes, there's money out of pocket, even if you were to do, like we were talking on another podcast about 100% financing, a down payment. But if you take that into consideration, you could do as little as 3% down. But when it comes at the end of the day, when you compare what your rent payment's going to be versus your mortgage payment, and I'm going to say 9 times out of 10, your mortgage payment is going to be much less than what the rent payment would be.
For sure.
And then every month you're taking your money, that money you're putting down, you're kind of investing back in yourself, I feel. It's almost like because your house is your savings account.
So Elizabeth, what about monthly payment?
Well, monthly payment is something I really like to talk to my buyers up front. Before I even ask them how much are they shopping for, I like to ask them, what is your budget for your monthly payment each month? And that is to include taxes and insurance. Because what they want their monthly payment to be and what it might actually be could be two different things. So you want to make sure that you talk with the buyers first, understand their lifestyle, understand what their desires are. Is it the lower monthly payment? Is it cash to close? Where we can zero in to find out what the perfect loan for them is. So understanding that some loans require both taxes and insurance. Some require flood insurance. So understanding where your budget is really the biggest part of understanding where you want your purchase price to be.
I had a client recently, and she called me and she wanted to look in the $350,000 price range, but she wanted her mortgage payment to be what her rent payment is.
And how much was that?
$1,800 is her rent payment. So I had to play with the numbers. So instead of $375 or $350, I took her down to $275. So she's like, but I want to look at houses in this price range. I'm like, you have to understand your monthly payment's going to be higher.
Right.
Which is more important to you, the monthly payment or the purchase price of the house? So she ended up going with a higher purchase price.
Right. Well, and
At least she qualified.
Right.
Yeah.
And it's really not about what purchase price you qualify for. It's more about what monthly payment you qualify. Because we can have a $350,000 house with low taxes that
Yeah.
you can qualify for all day long. But you take that same $350,000 house, you put it in a CDD community that now has an HOA and higher taxes. So it's really not about the purchase price. It's more about the monthly payment.
And the monthly payment is all about what you're comfortable with, because some people have expensive taste and they like to collect purses and cars
Yes.
and boats and
Shoes.
stuff, and so they may qualify for that $3,000 payment, but they spend more in their monthly budget than than they do, and they feel like they need to be in a lower.
And all
they
of
want
these-
that payment lower so they can buy their toys.
And all of these things are really important before you make the decision of whether or not you want to rent or own. So that's very handy to know. And then Cindy, talk to us a little bit about financing.
So with low down payment financing, I mean, especially like VA is the best program out there for no money down. And you can get in a lot cheaper as a veteran versus renting. Excuse me. I mean, if the seller will pay your closing costs, all you have to do, you have zero down payment. And versus renting, you've got first, last, and security. So if I hear someone's a veteran, I'm like, hallelujah, because you can qualify, you can get in with, not without first, last, and security, no down payment. This market, you probably have to pay your closing costs because sellers aren't too apt to pay it. But it's a great program, low interest rates. FHA is another good program, 3.5% down. Seller can pay all your closing costs up to 6% of your sales price, and you're still getting in lower than rent because you're looking at maybe $7,000 versus, first, last, and security, which is with rent these days, you're talking about another $7,500.
Yeah, pretty close to the
$7,500,
same.
You do
$8,000.
first, last, and security, and it's more than your down payment.
And with every payment, you're building your own personal wealth versus
Yes.
building your
You're
landlord's
putting it towards
personal
your
wealth.
equity.
Yep, absolutely.
Yeah, the equity is growing, and you're getting, it's an investment. It's an investment in your future.
Yeah.
So Kim, talk to us a little bit about location and how that comes to play.
So a lot of people, when they move, they have their jobs that are here and there, and they have their children that they want in certain schools. And so sometimes those areas are higher in rent and stuff. So sometimes buying is going to be a better option than trying to rent in those areas where your schools and your jobs are. So it's good to take a look at the whole neighborhood and the whole area to find the right neighborhood for you, and talk to your local, lender and whoever, you trust, and to help you make that decision whether renting is better than purchasing, because I think right now you're much better off to purchase than to rent. The rents are so high in these desirable areas.
Absolutely, and location, I mean, gas prices.
Yeah.
If you can buy and be closer to work versus
Yeah.
having to pay those
There's
gas prices.
so much involved, when you're traveling to work and, to school and taking the kids and stuff like that. It's important that you're near a park or whatever, but those are going to be higher rent districts. So buying may be the better option.
So another thing to consider when you're looking at renting versus buying is your actual life situation. What is your situation like? Are you a single person? Are you married with kids? Do you have family that you may have to take care of? We're seeing a lot of people nowadays combining their family, seeing that the parents are getting older and the kids are going, Mom and Dad, we'd rather take care of you, and they're combining a generational type situation. But another thing I'm going to mention real quickly is sometimes the job really can make a difference. I had what I thought was going to be the best buyer out there, a pilot. A female pilot on top of that. I was really excited. But she could pretty much qualify for exactly what she wanted. The problem was she couldn't decide where she wanted to live. And she said, the problem I'm having is I don't think I want to stay in any one location longer than 2 or 3 months.
Wow.
Yeah. I said, well, then,
That's a hard one.
yeah, then buying and owning may not be the best option for you at this time in your life. So that's where you really have to kind of look at the whole picture. So we've talked about the cost when it comes to buying versus renting, looking at your desired payment that you want, looking at the mortgage programs that are available, considering location and your life situation. And these are all, I think, really, really great things to consider. And of course, we encourage you all to contact us, because there may be things that you haven't thought about that can put you in a home that you didn't think you could buy, or possibly help you make the decision which is best for you.
Absolutely, and something I wanted to bring also is don't let credit necessarily stop you.
There you
Please
go.
feel free to reach out to us, because each one of us can talk to you about your credit. We're not licensed credit repair people, but we can lead you in the right direction. So don't let that stop you, because you've got to know where to start, right, ladies? So if we can get them on the
can
right
help.
track,
Yeah,
absolutely.
get you prepared for it.
Absolutely.
And
I'm
there's
for the
finding
final.
a lot of people that I've pre-approved over the last couple of years, they're throwing their hands in the air, they're giving up. I'm not going to buy. I've made too many offers. I'm just going to rent. Just
Yeah.
forget about it. I'm just going to wait for this housing bubble that we all feel is not going to happen. Or interest rates have gone up. And you know what I like to tell them? So the interest rate, let's say, is 4.375 today. You know what the interest rate is on renting? 100%.
Yep.
There you go.
100% of your money goes to your landlord.
Very good
0%
point.
to
What a
you.
great
Yeah.
point.
Yeah.
Yeah.
So just tell them it's 100%.
For sure.
100% interest rate when you rent. Don't give up. Just don't give up. I mean, I know people have to sign a year's lease at some places, but
And it might take 6 months for us to help you repair your credit or get you to a score where you get the most beneficial interest rate, but at least you're on a game plan.
Right.
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 We also have a chart that I've created, and they'll show the chart on the video so that you can see what rent versus own over the 9-year period and how much equity you can acquire.
Well, there's still no single better way to accumulate wealth
Right.
than to own property.
Exactly.
For sure.
Not pay the landlord's rent.
Right.
And pay his mortgage, but pay your
Pay
own
your-
mortgage
pay your own
and gain your own
mortgage.
appreciation.
Yep. So
Exactly.
start by picking up the phone and calling one of the mortgage chicks. And let us get you on the road to owning rather than
Homeownership.
renting.
if you have any ideas or questions, please email us at mortgagechicks@VanDykMortgage.com.
Follow us on Facebook at Mortgage Chicks with Hot Tips.
Like, share, and subscribe to Mortgage Chicks.
And thank you for tuning in. We'll see you next week.